short video on my entry yesterday. Okay, this is the trade I'm referring to. Okay, everything's on my Twitter, nothing's hidden from you at Forex Recipe. So this is the trade that I want to walk through in this video. And if we look at what's happened, so you saw yesterday my shorts from Asia. Okay, they are also on Twitter down here. Okay, there's a short I took later and then another short earlier in Asia. Okay, so look at those on Twitter. So that short was quite straightforward. Okay, I walked through the entry live on the previous video, so find that video and go watch it. Okay, the target was the low of the previous day PM session into this gap, and we got that. Okay, we got that right at the open of London, 2 a.m. Okay, now that is coming into this level here is not random. Okay, this gap is not random. If you go to a 1 hour chart, that level is there. Okay, coming into a 1 hour order block. Okay, so that's why I have a target down there. Not only is it a 1 hour order block, okay, marked on my chart, but it's also the low of the previous day PM session, which means it's that 2 to 3 p.m. previous day liquidity, and there resides a fair value gap. Okay, so it's a very scientific target, not a random level by any means. And notice how, where's the chart on here? Notice how this comes into that right at the start of London. Okay, so time and price coming into not only the fair value gap, this is also an order block, as I mentioned on the video that I posted yesterday. Okay, it's a 50-minute order block, a 50-minute fair value gap, and a 1 hour order block coming into this down candle again at 2 a.m. So very key time. Okay, so that was the target for those shorts from the Asia session. Okay, now I took an exit when we got below Asia. So this was below Asia. Okay, once the market went back below Asia, I took my exits, re-entered into this fair value gap. Once we got I moved back up. Okay, entered short again. So these were the first two shorts. Okay, closed. There you go, below Asia. Haven't reached the target yet. Okay, you can see it's come down at a brand new hour. Okay, there's always going to be some kind of reaction at a brand new hour. So I've closed the trade, waited for a pullback, okay, into this fair value gap. Also, this is a bearish order block, okay, and then down into the target again, key time, right at 2 a.m. into this fair value gap, 15-minute order block and a 1 hour order block. I've closed my position. Okay, that's the second trade that I've done. And I've mentioned here on a short time frame, 5 minute, that this move up is into this order block, which is the one I've shown you on the 50-minute chart, back down to where? Down to this fair value gap at 2 a.m. Look at the reaction at 2 a.m. Okay. And that's from that hourly order block. Okay, so that's important. You got to know your levels. You got to know your levels on multiple time frames and watch the reaction. Okay, so from London we've gone up, and let's look at this. We've had a move up. Once you get an engulfment above, this is the down candle. That's the order block. That's taken all this liquidity coming into 15-minute order block and a fair value gap and a 1 hour order block. Okay, that gets engulfed. When does that happen? At 2 o'clock, which is London open. This is now changing the state of delivery. Okay, it's an engulfment candle, but it's not any engulfment candle, because this was an engulfment candle as well. But I didn't take a long from there. Nor am I expecting that to be a changing state of delivery. Okay, this is a manipulation, and this here is accumulation. Okay, this down crawl is doing what? It's crawling down. Look at the difference in this move. It's crawling down, up, down, up, down, up, down, up, down to this level, which is the fair value gap, 15-minute order block, and the 1 hour order block, bullish order blocks. Okay, and we get an engulfment. That's why this engulfment is important. We consolidate, come back down into the order block. So we've got order block is validated, bullish order block validated, because we now have a change in state of delivery by this engulfment. We go consolidate and then come back down into 3 a.m., 3:30 a.m. is very key. So these times are important. 2 a.m. is very important for London. Okay, 3 a.m. is important, and 3:30, which is this candle here, is very important. You get a expansion. Okay, or what ICT calls price displacement. Okay, so this is bullish order flow. Okay, I'm now waiting for the price to come back down into the order block and into this fair value gap, which we get there. And time's important. All that happens when? That is 7 a.m. That's important. 7 a.m. at the open of New York. Now notice how this takes out liquidity. That's important. Okay, so this was inducement back up down into this order block, into the fair value gap at the right time. 7 a.m. This is 6:45. That's 7 a.m. Okay, but around that time, if you look at my entry on the long that I took, which was this one here, the last trade that I did yesterday, look at the time here. That's 6:48 p.m. Okay, this is the time of my broker's platform, so ignore the actual time there. I know that is 6:48. Okay, and the trade is there. That's 6:48 there, right? It's in that candle as it's coming down into the order block. I've taken along. Okay, and you get consolidation, but the movement's going to happen around that 7 o'clock. This here is another order block, another bullish order block coming down into this bullish order block, and this is 8 a.m. again at the new hour. Okay, as we go up, this here is the 9:30 candle. That's the most important candle. That 9:30 is the best time to trade gold. 9:30 comes down, takes that liquidity, comes into this order block. So we have bullish order flow from London. This engulfment candle has changed the state of delivery, and a bullish as soon as price closes above this down candle, took out all this liquidity, came into this 50-minute fair value gap and 50-minute bullish order block and 1 hour bullish order block. Consolidation back down into the bullish order block. Price displacement, right? Price displacement back down at 7 a.m. the right time into this fair value gap, into this bullish order block. Okay, I've taken my long there. It's going up. 8 o'clock is key. 8 o'clock comes back down into this order block. Okay, this order block's also been created. We go above. We got to pull back into there. That's another entry if you don't want to go along there. This down candle is another bullish order block. It touches this bullish order block into a shorter time frame fair value gap. Okay, once we go above that, we continue bullish order flow. Notice how we get a retracement back into there. 8:30 is important. Okay, And 930 is the most important. It takes out all that liquidity, comes back down into this bullish order block, and that's where you get price displacement and creates the bearish order block. But I'm long here at this point. Okay, initial target can be at these highs, but I've taken my target here. Ultimately, we got above Asia, which I did mention we possibly would get in my previous video. I mentioned that I was going to look at how London trades, how New York trades, and we'll probably get either this fair value back close, go and watch the video, okay, or we get a tap above this high, which we got, okay. We got this closure on this fair value gap as well, but order flow was bullish. So there's no need for me to look for shorts into there, okay. Order flow is bullish. Back into this down candle, order flow is bullish, and I've taken along from here, okay. Now, I was targeting this yellow line. All I've done there is I've taken a 1 hour chart, okay. Nothing's hidden, so I'm showing you everything that I do in my trading. I've taken this last up high, okay. So when I'm down here at London or down here at 930, and I'm looking for my targets to go long, I can target this high or somewhere in this wick, okay, because this wick hasn't been traded into. I don't want to target this high because there's no guarantee we'll get it. Obviously we did, but I want to be in and out of this trade quickly because I'm counter trending, right? I'm expecting a drop, as I said in my previous video. I'm expecting a drop. I'm looking to go short, okay? So if I'm taking longs, I want to be quick in and out, all right? So I've taken this wick and I just calculated the midpoint, and that's where my target was, okay? That's around that 2480, right? Somewhere around there. If we look at the exit, this is 247940, right? So right at that level. Okay, that's how I got my target. Okay, so that's the long that I took. Again, this is counter trend. Look at how it's crawling up. Okay, you can tell by this movement that this is going to come down, right? This is reading the tape. You've got to get familiar. Look at this movement, down, up, gets taken. Right, same thing here, up, down, gets taken. You've got to be, that's probably a little bit more advanced. I don't expect you to understand that. Okay, that's more about tape reading. Now, let's talk about the short. I'm already short. Okay, I said in my previous videos, I'm looking for a move down to, I said I'm looking for a 300 pip move drop. We're starting to get that. I'm looking for this level here, as I've already mentioned. Okay, somewhere around here, this 2430, 2440. Okay, this is the refined target so far, which is the fair value gap inside of this order block. So that's currently where I'm targeting, current shorts. Okay, let's talk about the current entry. Clearly on a 50-minute chart, you can see we have taken the highs and completely rejected that. Then the safe entry would be a pushback up into these bearish order blocks, right? So these two up candles that I longed from 7 a.m., okay, well 6:48 to be exact, yesterday New York time, up to this target. I took that long. Okay, that's this trade here, as I mentioned, right, on a 5 lot, and there's my exit there. Okay, now that movement is a crawl up to take out this liquidity, immediate rejection. Okay, and this here is 10:30, right? This is the last half hour of, well, basically the last hour, if you count from the 10 a.m. to 10:30, the last hour of New York, 10 a.m. to 11. This is a pullback into this bearish order block. These last two up candles, okay, they were completely engulfed. Now we have a change in state delivery. Okay, we've completely engulfed these two up candles. That is now the bearish order block, and this move up is the safest entry into that at the short at the right time inside of New York. Okay, 10 a.m. or 9:30 a.m. will typically make the high or the low. So here, this is 10 a.m. makes the high. Okay, so when you're looking for gold, 9:30 a.m. is the best time to trade, and 9:30 a.m. will either be at the low or the high. Okay, here we're at the high, right? We're at the highs, but 10 a.m. is what makes the high. That new hour, again, it's the hour that you need to be looking at. Okay, there's these hours, the times are very key. So 10 a.m. makes the high and completely engulfs, and then you can have a safe entry in this pullback up into this bearish order block for continuation down. That move in itself is enough, wherever we ended up with. Okay, that move down to here is enough, back down to these lows or these lows. Okay, this is previous session lunchtime liquidity. Okay, that we could have targeted that. So from this bearish order block down to even this previous low is over 100 pips, or below to lunchtime the previous day 140 pips. Okay, or into this gap, which we're almost there, is over 200 pips. Okay, so targets are easy, entries are easy, timing's important. Now I actually got in on a very short time frame. I was looking at a 1 hour chart, okay, at the time, and let's have a look. That was closer to 10 a.m. is when I entered this trade. So this is all evening session. Here we go. There we go. So you can see immediate rejection, right? So I already had my levels up here, but I'm watching this. Okay, immediate rejection as soon as taking that high. It's come down really quick. This is the change in structure right here, breaking structure. This down candle made this high. As soon as we get below that and we push back up into that, I'm short. Okay, I'm short from there. Okay, and obviously that position is in good profits. So short from the yellow line above. Okay, it's holding those shorts. Okay, so I'll update you as this moves so far. So far that position is, what are we at? Over 200 pips in profit, but I want to see us get down to these levels as I mentioned. Okay, so I'm expecting today to be a continuation trade to the downside. Okay, so I hope the video has been useful. Always monitor Twitter. Okay, I'm putting everything on Twitter. This is where I journal all my trades, so you can see them all the Asia trades were there yesterday. Yesterday's long New York session was also there when I closed this short trade out. Once you get somewhere below, that'll be later in the day. I'd expect this to probably be later in New York or London session where we reach down below. Then I'll journal that trade and I'll post it up, okay? But this entry that I've taken on a 1 minute chart is probably a little bit more advanced. The safer entry here is to wait for this engulfment at the right time. This is 10 a.m. This is a 10 a.m. candle. 10 a.m. makes the high, okay? Then that creates these two up candles. Your bearish order block. This is price displacement, leaves a gap. The gap's still open. We come back up into the order block here, the bearish order block. Take a short, okay, at 10:30, and you got to set your targets. As I said, in 15 minutes, from that entry there down to this low, that's enough, right? So let's say you entered right here on this candle down to this low. That's over 100 pips. In 15 minutes, you're done. Okay. So I will now talk with you in a future video.